Ladies and gentlemen, our next speaker is a household name in South Africa. Ferdi Meyer is part of BFAP. He's, I must say, one of those people and institutions who's doing a massive amount of work for us as farmers in this country. He's going to present on the future of the South African soybean industry and our global competitiveness. Fortunately, the guys who's doing the exports from South Africa, they're in audience. They are looking with anticipation what you're going to say and the amount of soybeans we've got here, and looking forward to your presentation, Ferdi.
Good morning, ladies and gentlemen. Am I on? What are you on? Slides also coming? See. It's a great privilege being here this morning, and obviously speaking after you, Leandro. I did a quick calc. I think you can probably process our total crop in, I think, 2 weeks. Time. That's a size. We're very proud of our growth and what we have achieved, but Brazil can do it in 2 weeks' time, and that excludes what you're exporting. So, nonetheless, it's soybeans has been a passion and I think everyone in this room appreciates the fact that the industry has really been a success. And we're very proud of what the industry has achieved and grateful for the growth. And it's really been a path where many role players in this room and outside have made a huge contribution. And I'm trying to, in Leandro's presentation, trying to pulse where are we in the cycle and how fast, in which direction is this industry moving? What are the next steps? So in my presentation, I'll give a brief, just a bit of a context on South African agriculture. That's just for you and not as elaborate, just 1 or 2 slides on it, on the South African agriculture. Then talk about the key drivers that contributed to soybean, to the subsector's growth up to now. And we need to look at whether those drivers are still relevant for the future. Are they still there? And how much more can we grow, given the natural resource potential, the economy in our market, and a few other factors. So this briefly, I think many of you have seen this, our slide that we've produced in BFAP, where we always want to make people aware that if we talk about soybean production alone, it's that part of a total segment. So if we think about agriculture, we normally talk about this 3% to the total economy. I think in Brazil is a little bit more your primary sector. But still, everybody that's sitting in the room, I can identify players that are sitting in the input side. There are some processors here. There are some traders in the room. And there are support services in this room. So and if we add up all of this, each ton of beans that's produced here requires inputs and requires the full value chain. And if we add up all of that, we're looking at about 14% that the agriculture sector contributes. So if you would take away agriculture in South Africa, you would lose about 14% of the total economy. Now that's now if we think pure economics. But obviously, employment is about 8%. Your food security has a huge contribution, especially in rural areas. And a lot of times, we also understand, and we're not going to go into detail today on that, is there's a big chunk of this agriculture sector in the informal economy. We have about 2 million households who are also reporting and producing some form of agriculture. So in broad terms, Leandro, we have about 40,000 farmers who are VAT registered, which implies about R1 million or more in turnover. And then we have about 300,000 farmers who are, I would say, between 300,000 and R1 million of turnover, which also still produce commercial, if we think about a commercial or definition of selling surpluses. And then we have about 2 million households who are mainly producing for themselves and sometimes a bit of surpluses. So that gives you a kind of a broad spectrum of our composition of agriculture within the broader economy. If we think about our natural resources, just the reality is that South Africa is limited by the amount of land and natural resources that we can produce on. So in this map, we can clearly see that extensive grazing, that's the Karoo, Kalahari area. This is where you need about 10, 15 hectares per small livestock unit to produce. And it's very marginal, low rainfall. And then we have intensive pastures or more your pasture areas that's suitable for cattle farming and higher potential livestock production. And then we have this area here, which is about 14% of extensive field crops. That's your soybeans. Your intensive field crops, those are your irrigated crops, and then orchards and vegetables. Now that area, that 3%, is about 1.4 million hectares of irrigation in total, if I add all the irrigation. And then in here these are our soybeans sitting in here. Those are our field crops. That's about, in total, we would say about 13 million hectares in total of land where you can actually produce on field crops. And you can see clearly here the higher potential land sits towards the east of Pretoria. If you go that side in Mpumalanga, northern parts of KwaZulu-Natal, this area over here. And then we have some more higher potential land also in this area, and I'll talk about this later on, but very hilly, and erosion is a big issue here with lack of infrastructure. These are the big production areas here. So soybeans, and this is where we've seen an initial production over here in the eastern part of the country. That's where it all started, and then it started moving very quickly towards the Free State, southern eastern Free State, now more in the recent years into the western Free State, and then obviously the northwest, also expanding areas. But the biggest area in soybeans sits around here. And that's where in some of these areas over here, we already see crop rotation, maybe not quite 50-50 soybeans, maize, but probably 40% soybean and 60% maize. And in these areas, we would have more of the sunflower maize, and then soybeans obviously making inroads in here, and that's where we've seen a lot of the expansion also in recent years. Free State, big area over here, and in my next slide, I'll show you how much hectares have we lost in the Free State after we moved from our dedicated, where we had marketing boards in a regulated area in the 1995, 96, 97, when we moved to a deregulated market, so in the free market where you don't have the marketing boards, where we actually lost a lot of hectares. So Andries and I have talked a lot about the shift in wheat production in South Africa, where we've lost about 1 million hectares of wheat. And some of that went back into your soybeans and maize, especially with the quicker varieties, the cultivars coming in, because these areas are getting an earlier frost. And some of those areas were just purely not competitive in the global market producing wheat. So wheat was the one that lost out a lot of the hectares. We replaced some of it with maize and soybeans, but some of those hectares are actually back into pastures and never got back into production again. So that's kind of in broad terms. I didn't mention the Western Cape. So this is here where we have our winter rainfall region, and we have wheat production and canola is expanding rapidly. And also in the recent years, some very interesting trends with canola coming in. And if we think about soybeans, one automatically thinks about, like you're saying, your soybean complex, your oilseed complex, with canola also starting to make certain inroads, especially in the protein and oil market, or protein market here, and then obviously vegetable oil also over the rest of the country. So some interesting trends, and I think this is always, when I look at this graph, we have a saying in BFAP where we say resources are not pushed into production, they are pulled into production. And you can clearly see this from the graph. If you look at, and these are, I took just the hectares of production of the main grains and oilseeds. So these would be your maize, white maize, yellow maize, soybean, sunflower, sorghum, your main crops. Didn't include groundnuts and all of the rest. But here you can see clearly now, Leandro, I was looking at one of your companies. They do 5 million hectares. Your co-op, that would be all of our hectares. That just goes to one of your companies, 5 million hectares. But colleagues, look at the trend in area under production, because this is fascinating if you would just observe the trend. So our hectares in South Africa, as I've mentioned, after moving into a deregulated market, we lost a lot of hectares. We're going out of production that in a subsidized environment we could produce under. And once we moved into this free market with no subsidies, those hectares fell out of production. And then obviously we had these very interesting periods over here, 2005, that big drop. Who can remember what happened there? That was the organized less planting of maize in South Africa. After several years of very low prices, there was an organized drive by farmers to produce a lot less maize. Prices went up again. But since then, you know, we've kind of moved, I would say, sideways, a little bit up. And then this amazing period came from 2019, where in real terms, prices globally just started rising. And we had a combination of COVID, we had the Russia-Ukraine war, and internationally just in real terms, prices rose. We had the opportunity and farmers moved right back in. And if we look at area under production now, it's for the first time, you know, we have area planted that's the same as 30 years ago. For the first time in 30 years, we are back over 5 million hectares of production. And this was the main drive coming in more recent years. So I'll talk about the outlook in a moment, but that area, and Leandro talked about the increasing crop. If you look, and there are some traders also in the room, if you look at the bigger crops coming into play, because we are not the only ones that are responding. Brazil is responding, Argentina is responding, the Americans are responding, expanding area. So I always say, if you give a farmer half a chance to make a profit, they'll move into that space and they'll expand. So we've seen this expansion. And on the right-hand side, that's where you can see the dynamics playing out. So this is the total area, but just look at this spaghetti bowl of different trends. But the one that's obviously that I've highlighted here in red is the soybean trend. From 1993, with an area planted maybe 200,000 hectares, 120, 150,000 hectares, and now just over 1 million hectares, 1.1 million hectares, and actually for the first time we're producing soybean. The soybean area is more than what we're producing under yellow maize. White maize has come down consistently, well, if you look at the long-term trend line, and then in recent years, just look at these last 4 or 5 years, white maize has increased the area quite a bit. And obviously this is a concern, I'll talk about that a little bit later on, is, you know, this is hardship, if I can put it that way. We've seen a rapid rise in maize meal consumption again. As our population is struggling, low income, job losses in the local economy, there's a bigger drive for maize meal consumption in the country and also in our neighboring countries. And that's why we've seen white maize area actually come all the way back. Yellow maize has been the opposite, kind of moving sideways, and we actually lost some hectares. There was a period in 2005, about 2012, where yellow maize was increasing and white maize was coming down. And that was a period of time where our animal sector economy was growing fast. We were consuming much quicker poultry meat, or every year growing the consumption of poultry meat. Production of poultry was expanding, and that feed demand pulled a lot of yellow maize hectares and then soybeans into that market. So these are the longer term trends. Sunflowers kind of bumped around 500,000 hectares. not really increasing. And it's the meal market, so most of the vegetable oils were then imported through palm oil, and we have some production of sunflower oil, obviously, and now soybean increasing rapidly. But sunflower hectares haven't increased that fast, and it's really, this is the soybean, this is the big story here, where you have soybean area moving right into it. And we'll get to some of the outlook moments just now. So if we put soybeans then, just let's put the focus on soybeans. This is a nice long-term graph, again, over the last 30 years. Not much happening for many years, and then we had this period from 2000 onwards. And this is actually what I did on this graph. I just put down soybean meal or cake imports. Because that was at that period of time, we didn't have much soybean production happening, but there was this rapid increase, as I've mentioned, of local production of poultry. And to some extent, dairy was growing, egg production was growing. Pork industry is much smaller than in relative terms than what you would see in Brazil. Your pork industry is smaller than poultry, but in our case, it's maybe 10% of the poultry size, or maybe 15% at this stage. But if you just look at this area, this expansion in the imports of soybean meal, we were touching about 1 million tons of soybean meal from about 2007 for about 2012. And this period here, this is essentially, and I'll come to the drivers, this was one of the big kickers which said, here's an opportunity opening up. There's a big opportunity for import replacement, and that's when we really started seeing soybean production taking off. This is a period where we saw more a constant drive and awareness by various companies saying there's an opportunity, we can grow more soybeans, look at the amount of imports. If we can get processing going, there's a real opportunity. So those were, we were actually importing the meal, we were importing beans, and at that period of time, 2007, 8, 9, that's where we saw the first also introduction of crushing plants, and then the expansion of soybean under production. And by 2023, as Andries mentioned, that was the first year where we actually produced a surplus of meal. So soybean meal imports have been coming down all the way. And in 2023, we had basically all the meal replaced, and we actually exported a significant amount of beans. Almost 600,000 tons of beans were exported. We did have a hiccup last year with 2024 with a drought, and our production fell back to 1.8 million. We imported some meal again, especially in the coastal areas. But overall, we're again looking at this year's crop. We'll be in a position where we can crush sufficient beans in order to serve the local market. But we'll get to those dynamics in a moment. So that's in brief, colleagues, the kind of the growth of soybeans over the years. So let's think about the ingredients. I call these the ingredients to the recipe. What were the 4 main ingredients to the recipe which caused soybeans to grow as fast? And I've mentioned some of them already. So it is the major opportunity in import replacement of soybean meal. And I lifted out the production of poultry, but there were other industries also. Your dairy also grew in that period of time, but poultry was really the kicker. It expanded a lot. If we think about that period of growth, our South African economy was growing at about 4 to 5% per annum. Just imagine that. So that over that period of time, poultry consumption was growing at about 7% per annum. And I'll show you now in a moment what has happened to poultry consumption in the meantime. Then the strong awareness drive by organizations, the PRF, OAC, UAPOT, the Grain SA, on technology transfer, extension services, the opportunity of the benefits of growing soybeans in a rotation with maize and other commodities. And there are many other institutions involved in this whole drive of awareness. Then there was the clear policy directive by the DTIC to promote private sector investments in crushing plants. And that was one of the big catalysts also for companies to invest in crushing plants. So over that period of time, let's say from 2008 up to 2012, 2015, we had about 2 million tons of crushing capacity installed in South Africa. Solvent extraction plants, high-tech plants, which were on par with, and these were, a lot of them were also international companies, and producing great quality meal, and really created this pool. So initially, we didn't have enough beans. We had more crushing capacity than what we had beans, and it immediately pulled those beans into crushing, and therefore we didn't see any exports of soybeans in that period of time. And then lastly, extensive cultivar trials, improved farming practices, introduction of technology levy sector. We'll have a presentation in the afternoon also with some of those colleagues. The ARC doing extensive trials, a lot of data coming through. In many farmers groups also, you saw farmers groups doing their own trials, trying to understand which cultivars, which areas. And I loved the map also that Embrapa does. I think that's something that we can think of in future, trying to map out as we learn and as the data comes through, in which cultivars, which maturity groups you can grow where. So all in all, if we then take these drivers and we just say, if we think about the supply and demand dynamics, we put it onto one graph. This is really the story from shortfall to self-sufficiency and now into exports. So here you can, I've just mapped this differently because now you have production and domestic use, with the blue bars being production. That's our 2.7 million crop there, or 2.8 million in 2023. Those are where we initially had to import beans. We moved from imports now to self-sufficiency and exports. So that's where we exported about 600,000 tons of beans in 2023. And then last year, as I've mentioned already, this drought period, but also you can look at the price, and this is a local futures price, a SAFEX price, and that's import and export parity. So our local price is now, since we are starting to produce more consistent surpluses, it's starting to trade more consistently at export parity. And there are periods of time, August, September, October, there are periods of time where the opportunity, that's the window for exports, where our prices sometimes fall or dip below export parity, and that's where we have opportunity for exporting beans into the into the international market. Just looking at volumes, it's clear, colleagues, we are at 600,000. Even if we export 1 million tons of beans, we are a drop in the ocean compared to the volumes that are exported by countries like Brazil. So market space internationally is not the issue, but we'll get to some of the other factors that could play a role. So maybe just in terms of then talking about the future, and these are the next 10 years, around about 3.4 million tons of production in soybeans. That's what we currently have in the baseline under the current conditions. And the interesting part here is the exports at around about 400,000 tons. Now I'll get to where do the other tonnages go in a moment. Well, you can actually see part of it on the graph that you have processing. So domestic use, processing of around about just over 3 million tons being crushed and processed in South Africa, and I'll get to that graph in a moment. So this is kind of the longer term view, and there obviously, this is one alternative. Under current conditions, there can be different outcomes, hopefully towards the upside, but there are also some limitations in it, which I'll talk about in a moment. The interesting part is that we had this step change. This is just the amount of tonnages of processing of soybeans. My legend fell off. This is full fat. There's only that component there, and it's a small part. The biggest part are the solvent crushing plants. That's this green bar. And the good news is, just talking to industry in recent years, so where we had normally around about 2.3, 2.4 million tons of processing capacity in total, we are sitting at about 2.9 million tons of processing capacity, which is now our latest, it's around about that figure that we have in the industry. which is good news. So the industry, again, there's been investment, there's been expansion. We have space to process more beans. And then that's the reason also, if we look at the product, and I'll go through this a bit slower, this is a market for soybean meal, and this is a soybean oil market. So as Leandro was explaining these, we're fairly on the same extraction rates of the meal and the oil, with oil probably around 20%, 19 or 20% on average, and the meal about 79% or 78% meal. So if we think about the history, just look at meal, there we can see the success of import replacement of the meal and now becoming actually exports. So again, as I've mentioned, this is one alternative. So there can be different alternatives on it, because the question is going to be, are we going to export the meal or are we going to export the beans if our production continues to rise? Because the challenge that we're having, and that's what I'll show you in a moment, is our local economy is not expanding. Our demand for feed is fairly flat. It's not expanding at the rate that we're expanding our production in soybeans. So if that continues, if that's the case, we probably will see more meal and or bean exports. And that will depend on the economics of the crushing. So at the moment, under baseline, if we have this additional crushing capacity, we can process more beans, and we could export more beans if the pricing ratio, if the markets are developed, etc. And I'm sure there are traders in this room which would have much deeper insight on that than the one presenting now. On the oil side, it becomes very interesting. And this is probably the one that it definitely has an impact on the economics of crushing. So if you just have a look at net imports of oil, again, if in thousands of tons, that's on the right-hand side, we were around about 300,000 tons of oil imports, and then that has been reduced and to almost no imports of soybean oil, veggie oil. And the question is, what now? And this is where the switch comes in. So in the past, this market, as long as we've been trading at a shortfall and importing some of the veggie oils, we would trade at import parity. The moment that you start to crush more and you have to export your veggie oil or your local market, there are different options. Now this oil has to compete with imported palm oil, has to compete with sunflower oil, but it's not the same product. They're all different tastes and preferences and different usages. So the scenario of oil is becoming very interesting in the future. And if these crushers, and this is where the model solves a solution on volumes of crush. So under these scenarios, we have about 2.5 million, 2.6 million tons of crush, which gives us some exports of meal and some exports of beans to get to, if we are sitting with a total crop of about 3.4 million tons. But the question is, what will be happening with the veggie oil market? So if we would move into an export situation, export parity for veggie oil is a lot lower. It's about 20 to 30% lower than import parity. The alternative, and if we look at your biodiesel market, it's an interesting alternative. The realities which are always in all the debates that we've had with biodiesel production or ethanol production, if there's not a clear mandate by government, that and you clearly had your targets and your mandates introduced, that implies companies have to buy a certain percentage, it's a 10% or 5 or 20 or 15, whatever the target is, it has to buy that amount of biofuels from the market, and that creates its own supply and demand situation. It's very unlikely that we'll sell a liter of vegetable oil, which you can sell into the human market, into the fuel market, because your basic fuel price is lower than what you can get into in the human market. So therefore, a lot of water will have to flow under the bridge before we can aggressively enter that biodiesel market in terms of mandates and policies on the government side. if we want to explore that market. Otherwise, it will depend on how competitive we can be in exporting vegetable oil, which I think at this moment maybe into some of the African neighboring markets, but I think it's a tough game at the moment. The interesting spin-off, and just put this graph on for fertilizer use. We talked about it this morning on phosphate use and the importance that it has in soybean production. And this is a study that we recently completed with Stellenbosch University and supported by PRF. And if you can just look at the amount of NPK in South Africa, just look at the tonnages used. And over the last 20, 25 years, we have not increased our nitrogen usage in South Africa. Although our crop production went from, roughly speaking, 20 years ago, we would produce, if we look at total crops, or this basket of crops, let's say 12 to 14 million tons. Now we're producing around 20 million tons in this basket. So we're producing a lot more, but we haven't really increased our nitrogen usage. We have increased our phosphate use quite a bit. And you can see that line also as it correlates with the expansion soybean area. As the soybean area has moved in, we know the nitrogen fixation, the benefit of soybeans in the soils, and you have a lot more phosphate usage as well as potash usage in South Africa over the time. So certainly also playing an important role on the fertilizer side. So going into the future, if we think about what are the four, there are probably more, but let's think about 4 key drivers of growth for soybeans into the future. It's a slow growth in the local economy is a challenge in South Africa. Its meat consumption is flat or declining, unfortunately, in recent years. We think there might be some recovery in the coming years. But the focus will have to be on exports for now, both the meal and the beans. And as I said, some potential to relook some biodiesel if there would be more consistent surpluses coming. But I don't see that in the next 4 to 5 years. It needs development. Access to latest technology is critical, and that's what Embrapa is really leading. It's leading the way, and we've learned a lot from colleagues in that space. If I look correctly there, your Intacta started 10, 15 years ago almost, 2010, and Intacta's only recently, in recent years, we've really gotten into Intacta. So we are lagging behind with introduction of new technology. In the country, and I think, and that goes together with, and there are various programs also under the master plan, increasing the speed of registration, capacity in that space. The way that South Africa thinks about new breeding technologies is important. That's all going to have a role to play in access to technology. Obviously, competitiveness at farm gate, because the technology has an influence on farm gate. Globally, because although we are just a drop in the bucket, that ton that we're delivering onto the global market is competing with the Brazilian ton. Although we are just, we are just scratching the surface. But that's our mindset. We need to be, if we are now in the second phase, if I can put it frank, we have completed our initial phase 1 of soybean production in South Africa. We are now officially in stage 2. Of soybean production, and that will require even a bigger push focus on competitiveness. And then lastly is our expansion improvement in infrastructure. So we are so happy, we're not happy about the problems, but at least we have the same problems as you. We don't have 2,000 kilometers to cover, we have 1,500 to cover, but we have similar problems as you in the country. I'm going to skip over this. This is just some underlying data on the economy, but there you can see the projected growth rate on our GDP number there. It's 1.6% by 2030. This is projected by our colleagues at BER, and this number in January was still 2%. So unfortunately, the optimism around SA economy is fading a little bit at the moment. And there's obviously a lot that needs to be done in that space to create more drive in local demand. And this is the pressure that we're seeing, where we had low-income households actually in 2018, 19, 20 still reducing in the number of households that we have in that category. That category has actually been increasing. So we actually have more households now in lower income brackets. And you can see that flattening out, and we actually have the affluent household number declining. And that has a direct impact. I'm not going to deal with all of them in detail, but just to make the point, look at chicken production or consumption. The green bar is domestic use. So chicken consumption over the last 5 years has actually declined in South Africa. Production has increased, and you can run through a number of these categories where there's not much growth, or actually in some cases, look at veggie oils, has come down, and veggie oil production has increased. So in this reality of our economy, export markets are really important to develop, and that obviously plays into competitiveness. This is just a chicken story where we see the drop in production and consumption over these years, and these were tough years. We had the AI outbreaks. We are more positive about the future, but it's certainly not shooting out the lights than what we had in the 2010s, where growth was very fast. The good side in terms of competitiveness is closing the gap on potential yields, and I'm not going to say much. We have a great session this afternoon also, or after the break. But the reality is that South Africa, if we just look at the difference between cultivar trials over the long run and what our national average yield is that we're achieving, that gap is closing, which is a reflection of what's happening on the farm. So how close can we get with the general production on farm to what the real potential is? A big component of that is technology, and in that space, South Africa, if we look at our international programs and colleagues looking at what's happening here, we are fast adopters of technology. If we can have access to it, the South African producers are going to grab it, going to test it, going to trial it, and it's very much the same appetite as you would see in Brazil and in Argentina, where you also don't have a lot of subsidies. Farmers are hungry to understand what works for them and what does not. The result is, and I just wanted to spend a minute on this, Leandro, these were averages on yields. So here let's just look at soybeans. And what we've done here is taken the average yield over the last 5 years, 5 seasons. South Africa sits at 2.1 tons per hectare. That's Brazil, that's your 3.5. And then these little diamonds that's the average annual change over the last 10 years, growth in yields. And that's the line is the projected yield over the next 10 years. So just have a look at South Africa. There we had about 4% growth, average annual growth rate in yields, compared to Brazil, for example, you had around about 2%. Obviously, it's from a higher base. You already have higher yields in absolute terms, and you're consistently growing. So in the good news about this is we are closing the gap, at least as new technology is coming in. We are closing the gap on some of these major exporters, but certainly we are not there yet. So there we can see average yields, and it ultimately comes down to cost of production to compete in the export market. The other small bit here is also that our maize is also growing fast. So maize yields have increased by 4.8% and soybeans by 4.1%. So there are two stories here. The one is how competitive are we with soybeans relative to the rest of the world? The other story is how are soybeans competitive relative to maize, because that's the one that needs to be that's the one that will be compete within the local market. I'm going to leave a last thought. We talked about substitution of maize and soybeans a little bit, because people are asking me a lot of times, are we going to see a 50-50 in South Africa in 10 years from now, 50% soybeans, 50% maize? My answer to that is, as long as maize would trade at export parity, the moment that our hectares under maize reduce to such extent that you have maize starting to trade away from export parity, you'll probably have maize gross margins being so attractive that your farmers will tend to go back into maize. So remember, maize is still sensitive in terms of S&Ds, and the moment that we don't produce enough maize, you'll see maize prices increasing and farmers will move back into maize production. Colleagues, this is it. I've talked about the Eastern Cape. These are new areas. These are, if people ask us, idle land, expansion, net expansion in hectares. This is probably where it can happen. The rest of the country is fairly, there are some, I know, government land which is idle, which could come back into production. These were commercial farms. There are some hectares in that space. And then obviously in these areas, the Eastern Cape, there are underutilized land that could expand. So we can see net expansion in hectares going forward, but the economics have to support that. Together with that, the logistics, we've talked about logistics briefly, Leandro, but this is our map. This is where all our crushing plants, our silos, infrastructure, this is where soybean production is. And we have about 30% of our consumption at coastal areas. And that's we are competing head-on with Argentina, and there's no rail line running between the north and the south, and that gives us the same challenge. Colleagues, that's it from my side. Thank you very much for the opportunity to present on it. I certainly look forward to comments and questions on the future of this production. As I mentioned, these are some ideas. On some of the detail obviously sits behind it. Thanks very much.